What's going on, traders? In today's video we're going to talk about why price action trading is so powerful and why it is so important to keep devoting your time studying price action, because we had so many repeat patterns right one after another of high probability setups that it generated a multiple winning trades. And we're going to start from the very beginning, because as price action traders we want to follow the trend line rules. We want to look for high probability setups, and high probability setup is nothing more than a two-legged pullback, second entry at the proper key entry point. And the key entry point is trend line, support resistance line, or the exponential moving average. Now, market was in a strong downtrend. As you guys can see, the first thing we need to do, we need to locate our downtrend. Why? Because when we see a break of a downtrend, we are expecting for price to create a new extreme. And just like I mentioned, a high probability setup would be a second entry, and direction of a trend is down. So we're looking for a second attempt to sell. And there is a new extreme form. There's the first entry short, pullback higher, second entry short. But this is a horrible bar. When I'm going short in a strong downtrend, I want to sell below bearish bar, and this is bullish bar because it has a really big stem, bullish stem at the very end of the bar. Everybody started buying. So there's the second entry, and you're far away from key entry point anyway, so you just want to be patient. And price formed a double trap. Why this is a double trap? Because we have a second entry short that failed, and also we have a failed second entry short. A lot of people bought at the same time, trying to pick the bottom of the market. But this downtrend doesn't have a new low according to trendline rules. So you cannot buy the market yet. Just because you see the trendline break doesn't mean that market is going to reverse. No, you're still expecting for price to create a new extreme. You're still a bit far away from EMA. And for that reason, I really don't think that this is the great entry. After that price consolidates, you guys can see how the exponential moving average keeps rejecting price, which is a good sign that we're most likely going to create a new extreme. But unfortunately, there is no good trap to take a short, because once price is rejecting, EMA is rejecting price like that, we can look for failed second entry long, because any second entry long against the trend, which is down, is going to be a trap, and you want to bet on the odds that it's going to continue lower. However, the failed second entry long that happened right here is in a consolidation. Then you can reset the count and you get a first entry long, second entry long again. But this is a gigantic bar, quite close to these lows. So unfortunately, this is before the market opened, but you have to be patient. There is no safe entry to get on this, unfortunately, because the context still tells you that we are about to make a new extreme, and the new extreme was formed indeed. So at that point on, we expect correction or straight up reversal, or the downtrend can resume. If EMA is going to keep holding price, the downtrend will resume. But there is the first entry short, second entry short, but there's the uptrend that is in play. This is why we keep drawing the short-term trend lines, because we want to see when the bullish correction is over, because the trend line rules apply not only for the bigger patterns, but for the short-term ones as well. So there is a strong push above the EMA indicating bullish momentum. And after new extreme was formed, we can expect for price to create a new high of this uptrend. At this point on, price is looking like we're starting to consolidate. There was a move up, move down, move up. You guys can see how EMA is starting to get a little bit flat. But when you're not sure, you're just sitting on your hands and you're focusing on the short-term aspect of the market. And this was the short-term uptrend. There's the first break, and just like we expected a new low right here, we expect a new high to be formed. And there's the new high, first entry long, pullback, second entry long. The signal bar, however, is not perfect here. It's not great. I could mark it as an aggressive entry slightly if you really are understanding what's going on here, but I really didn't like it at the time yet, because price looked a little bit like a trading range. I was still expecting a couple pushes lower, but it is a second entry long, which would be a two-legged pullback at the key entry point at the exponential moving average. You would have to ride this out, and this is around the open market, open right here, and market formed a new extreme. So from that point on, you're expecting correction or straight up reversal. But look what you have. You have a lower high setup, but exponential moving average keeps holding price. Therefore, even though you have a new high form, you cannot take this short, because EMA keeps holding price. Even if you get a failed second entry long, you still cannot take this entry yet, because exponential moving average keeps holding price. There's the new extreme, first attempt to go long, pullback, second attempt to go long, and this would be a failed breakout, because most breakouts of these trading ranges will fail, and we traded up into a trading range, so we're most likely going to break higher. However, you're below EMA, you can easily turn down and go all the way down here. you don't have this trend line yet, not a high probability setup at this point on yet. So you just have to be patient, and don't worry, we're getting to the point where we're going to discuss why price action is so powerful, because market pushed higher. Unfortunately, they didn't give you a failed second entry short all the way up to here, but at that point I think it's a little bit far away from EMA and you're getting close to these highs. Market pushed higher, and this is starting something to change, because this is starting to look like a beginning of an uptrend. So you have to start to draw the shortened trend line. You have a break, you have a new extreme, which indicates that the uptrend played out and buyers are no longer in control. But take a look what you have. You have a new extreme, first entry long, pullback, second entry long. You have a 2 legs down, and you have the break of the downtrend and new extreme retested. So after you see break and a new low, you know that this downtrend most likely played out, and you have a 2 legs down. And just like we said, a second entry with the direction of a trend is a high probability setup at the proper key entry point. And here we are not at the key entry point because we broke below the key entry point. EMA needs to hold price for me to go long. So after there's a strong push higher, this is an important moment. This indicates resumption of a trend, that this is really starting to be a bullish uptrend, because once you have a break in new extreme, you can easily still trade lower. But it didn't happen. After 2 legs down, strong bullish momentum, and this is what confirmed that this is really going to be a bullish structure uptrend. And take a look what you have. We have a series of textbook repeat patterns of high probability setups. And what are these setups? Higher lows and failed second entry shorts. Because once you guys see a 2-legged pullback that broke below exponential moving average, same here, and even same here, hidden second entry long, you don't want to go long just yet because it is below the exponential moving average, and you need to wait for confirmation setup. And what is a confirmation setup? There will be a high low that confirms the 2-legged pullback. So once you see 2-legged pullback, not where you wanted to see it, where you want it to be, you see a strong push above EMA in this instance, and you have a high low setup and a key entry point holds price, big bullish bar, high probability setup, and you have a new low, first attempt to sell, pullback, second attempt to sell, failure. You guys can see price keeps being above the exponential moving average. This is now a strong uptrend, and this is a high probability setup because any attempt to sell the market in uptrend is most likely going to fail. You pushed, at the time I had my trading range like this, but take a look how far you already pushed off of this trading range. You cannot go back. Once this attempt to go back failed right here and you have this strong bullish bar, you have to abandon the bearish idea. You guys can see market push higher, and this was I attempted to go long here. I missed this setup on engulfing, and this is my first trade for the day, the failed second entry short right here. Then you have a 2 legs down, and once again, high probability setup. You keep trading easy. You see the uptrend, so you're just looking for second entry longs. Unfortunately, you don't get it above the EMA, you get it below. So you're waiting patiently. You never know how many corrections there's going to be. You have a strong push above the exponential moving average. Okay, same scenario right here, confirmation of bullish momentum, high low setup, same thing right here. And then you have a first entry short, second entry short, failure, big bullish bar, EMA keeps holding price, repeat pattern of this, high probability setup. Simple price action, nothing too complicated. Market push higher, turn back down, and you have a first entry long, pullback, second entry long, failure. You don't want to go long below EMA. On these instances, it's the same thing in this instance. This is even a horrible bar. You push lower, confirm the trend line, and once again, you're just sitting patiently. You're not looking to go short yet because this uptrend is intact. It is still valid. Unless you get a break at a new extreme, you cannot go long yet. And you have a strong push above the EMA, same thing as here, indicating strong bullish momentum, and you have a high low confirmation setup, same thing as here, and you have a first entry short, second entry short, failure. In all three instances, exponential moving average keeps holding price. You get a nice bullish bars. This is what you want to see. This is my second trade for the day, this trade right here. And market pushed higher. Okay, and you guys can see why it's so worth to focus on price action, because you could just learn to look for a simple, clean setups, and market will reward you. You just have to be able to ride out the instances where you're not sure and you don't get the clean entries. Market created new high, first entry hidden, that there is no trigger higher, so this is a hidden first entry, If you went on a smaller time frame, you would see a first entry trigger. This is why we call it hidden, because there is a series of bearish bars and there is a one bullish bar. So you can see that there is a first attempt to go long, even though you didn't trigger on this time frame. If you go on a 1,000 tick chart, you would see a tick higher. So there's a first entry long, hidden pullback, a second entry long. But because it's hidden, I can actually mark this second entry long, not that bad, because this is a two-legged pullback and it's now at the proper key entry point. Here you don't have the key entry point, and this just confirmed this key entry point. But take a look. If you're not sure about your trend line, you just wait patiently for the bullish confirmation, push above the exponential moving average. This is why you have the EMA on the chart, just as a supportive indicator, and you have a higher low, and look what you have. First entry short, second entry short, failure. 1, 2, 3, 4. Absolutely gorgeous repeat patterns. Trading couldn't get any easier than this. You don't have to overcomplicate anything. Beautiful, beautiful price action. And just as beautiful price action it was at the earliest part of trading, the second part was really difficult because market really didn't give you any clean entries on the other hand. Because you guys can see we strongly pushed below EMA. And you'll be still expecting a retest of a new extreme of this big uptrend. But you're starting to push way too down below EMA. Once you see move, you're pushing way too down, you have to trade the market. You get not the market you want. So this first two swings with this swing confirmed this trend line, and this set up the trend line, and this confirmed it. And you have a new high, first entry long, pullback, second entry long, failure. 4 touches of this trend line, bearish bias, every single bar is below EMA. This is a high probability setup because you don't want to go long on a second entry long in a downtrend now. You need to let this downtrend play out first before you start looking for a new extreme of the overall pattern. And you can also make a case that there can be an uptrend that looks like this, that already has break and 2x the new extreme. This is both valid. Both of these, I'm still leaning more towards the bigger pattern, but both of these are very close to being right. So you guys can see you have a push higher, first break, so you're expecting a new extreme to be formed. You only have a first entry long, pullback, and you're expecting a second entry long. But by the time you get second entry long failure, you already created a new low. So you have to be careful. You have to follow the trend line rules. After break of a trend line, you expect new extreme, and then you want to stop shorting in a downtrend. Okay? And this is where we start to be a little bit complicated. You're starting to go sideways. You have first entry short, second entry short failure. You're exactly in the middle of the range. You really have to know what you're doing here because the price looked really bearish. It even looked like there is a spike and a channel pattern like this. So you have to be really careful. Market push higher, instantly turn down. No clean second entry I would like. Just, no clean price action. You just have to be patient. Little break, new extreme spike and channel. First entry short, pullback. Second entry short, failure. This is a reversal pattern. At the time, I was looking at the downtrend like this. So I wasn't really feeling yet going long, but this is 2 failed attempts in the direction of the bears, and it failed. It's above the EMA, trend line is holding. So decent reversal pattern, market push higher. Unfortunately, there is no good setup here. Market is pushing higher. You're expecting a second entry long, but you don't get it. You get second entry long far away from EMA in horrible congestion. Once you push below EMA, then you're looking for failed second entry long. You get a first entry long, pullback. You get a second entry long below EMA, and you want to see a bearish bar below EMA so you can go short. And that didn't happen. Market reversed higher and gave you a failed second entry long above the EMA. So what you do now, the fact that we're pushing above the EMA is indicating bullish momentum. So I don't necessarily want to go short yet. So no clean entry here at this time. A lower high setup was a little bit decent confirmation. This is one of those few decent setups that you got. So I marked it as quite a decent entry. And then you're expecting first entry short, second entry short below the EMA. So you're going to go to the other side of the trading range to the support, and you don't get it. You have a push higher and you have a second entry short above the EMA. Once again, which push above the EMA indicates bullish momentum. So what do you do now? Well, you just have to sit in your hands because this is not a high probability setup. You don't want to gamble. Market push lower and you have a first entry short. You get a little pullback, but you can't, technically count it as a second entry. it looks like still part of the first entry. So you have a break, attempt to create new extreme, which is enough because the exponential moving average is holding, and you're looking for second entry short. But you know, I could mark it as an aggressive entry, but hopefully you guys understand that you just have to ride the consolidation out, and then you wait for the clean high probability setup, the second entry. And the same thing right here, new low, first entry short, second entry short, but you pushed above the EMA, and this just set up the spike in a channel. So you can't even go short here, but you have a breakout in your extreme, which indicates that the uptrend played out. So you're following the trend line rules, and you want to go short here, but unfortunately you kind of have to sit on your hands. And then you get a new low, first entry short, second entry short, big bearish bar, confirming the spike in a channel. So first, a decent second entry short of all of these. Unfortunately, the signal bar is really gigantic, so you probably cannot enter here. Market push lower. We didn't continue working lower, and we have a first entry short, strong push higher, second entry short failure. Inside of this trend line, EMA is holding, and you could be expecting a new extreme of the downtrend, which I was, but I forgot one thing. The bigger pattern takes precedence, and bigger pattern at this time was a trading range. So the fact that you pushed below the support, the bigger pattern is going to play out, is going to win, and the failed breakout eventually won. So this is a great reversal pattern. The market pushed higher, and you're expecting the same thing. You're taking the second entry longs at the key entry point. Unfortunately, you have a break lower. You have a break lower below the key entry point, and then you have a failed second entry short, which is a decent entry, and you have a bunch of decent entries, a couple of second entry longs, and we keep going high. We keep going second entry long right here. So a bunch of two-legged pullbacks at the end of the day. So there are more setups. I'm going to wrap it up early because I'm not feeling well at all, which I apologize, but just wanted to show you guys how important it is to keep believing the price action. If you see something work once, it will most likely work again, and these 4 repeat patterns were absolutely beautiful. So I'm going to wrap it up. I'm going to see you guys next time. Take care, buddy.